So if most of your net worth is tied up in your business, then you want to do everything possible to optimize that value and be able to orchestrate your timing on exit so that there's a lot of opportunity for the buyer, because that's what buyers want to buy. They want to buy the future. They don't want to buy the past. They will pay you for the past. That's what they'll compute the value of your business on. They don't want to pay you for revenue and profits that you haven't earned yet. And so if you can position your business for an exit where you are creating a lot of opportunity for the buyer, then they're much more willing to give you the price or the multiple that you're asking for.
Hey guys, let me tell you about Foliolens. We landlords fear complaining tenants, fast turnover, bad reviews and negative ROI. Over the years I realized it happens because we lack a system. They streamline maintenance and repair requests by inviting our co-investors and repairmen into the app to foster smooth communications between us, the tenants and the suppliers. Head over to Foliolens.com if you hate time-consuming admin tasks like tracking your property revenues, expenses, and due dates. So sign up for their newsletter at Foliolens.com and start managing your rental properties from anywhere in the world. All right, welcome to the Ideal Wealth Show. My name is Axel Mayhofer. I'm the founder of the Ideal Wealth Grower System, and today we have an awesome guest. Marvin Storm is with us, and Marvin, thank you for being here.
Yeah, I'm delighted. This is going to be a lot of fun.
Yeah, absolutely. So before we get into any kind of deep dives and details and stuff, Marvin, would you mind telling us a little bit about you, what you do, where you are, where you got to where you are now?
Well, I camp out nowadays in Northern California. I spent most of my career down in the San Francisco Bay Area. And after I exited a company a few years back, I pulled up stakes and wanted to get up to a less congested and more rural living. And so now I live just about 60 miles from Lake Tahoe, for those of you that are somewhat aware of Northern California geography. So it's in what is called the Sierra Foothills, or Gold Country, only about 5 miles from where I live. Back in the 1840s and 50s, this is where gold was discovered.
So how far are you like from Donner Pass or Truckee or places like
About
that?
50 miles.
Oh, okay. So see, that always made a good story for me, that people were camping out there over the winter when they were coming from the east, right,
Yeah,
and stuff.
yeah. So
Okay, very
yeah,
cool.
I'm just on the way up the hill, on the way up to Donner Pass, and
Okay, cool. Did you get any effects from the fires?
oh yeah, the fires, the big fire that just about burned down South Lake Tahoe, where all the casinos and everything are,
Yeah.
started just about 25 miles from where I live. We had a
And
lot
then
of
when,
smoke and a lot of soot and a lot of hazy days or a few months ago. So that was, yeah, the state of California threw everything in the kitchen sink to stop that fire from reaching Lake Tahoe. So
yeah, I know from our area here, as you know, and our listeners know, I'm in the San Diego area, and we were blessed and fortunate to have very little going on in our area. But I know that our fire departments were also asked, like you said, to be part of that kitchen sink and come and help you guys out. So,
yeah, it
okay,
was.
cool.
Yeah, that's life in California nowadays. A little bit different than it was in the past. So, but San Diego, that's a great place to live. I often told my wife that if I had to move from the San Francisco Bay Area at the time, that would be one of the top three places I would like to think and consider moving would be San Diego. It's just a breathtakingly beautiful place. I'd like to live right down in those high rises downtown San Diego that look out over the bay. 10 minutes from the airport.
Yeah, I mean, I'm not so much into that density, so I decided to be a little bit further out to have a bigger garden and stuff like that. But you need a pretty penny if you want to make that a
Yeah,
reality.
that's true. That's a true statement.
Yeah, we every once in a while we make it a little sport to actually go, when they have an open house for one of those. And the most funny thing I find is that they are being forced by the state to actually put some units in for lower income people. So instead of 1.5 million, they're only 800,000 or so.
Just what a homeless person needs, a
Yeah.
deal on a high-rise condo in downtown.
Right. Yeah. Exactly. So tell us a little bit, Marvin, what kind of gets you up and what are the topics that you're focusing on these days?
Well, after I stepped away from my business and sold it, I got to thinking, you spend so many years in the fast lane, and you got that pedal to the metal and you're working hard and you're putting out fires. And then all of a sudden you are in the slow lane and
Hmm.
maybe even over parked on the side of the road. And, that sounds great in theory. But after doing that for a while, it got pretty boring. And so I got to thinking about my exit. And I'd been an entrepreneur. I grew up in an entrepreneurial family. My father had a business. And so I
Right.
understood the entrepreneurial lifestyle and sometimes the long hours and things of that, like that. But when I had my last exit, I got to thinking about that. If I'd have been a little bit more dialed in to the process, I probably could have done a lot better for myself, but sometimes you just don't know what you don't know. I'd had sold
Right.
a couple of other businesses that were smaller scale, but this involved private equity and boards of directors and things like that. And I hadn't been down that road before. And I think a lot of entrepreneurs find themselves in that situation where they become really, really good at what they do on a day to day basis. And they're experts executing at a pretty high level on what they do. But when it comes to selling a business, that's kind of the first rodeo for a lot of people, and they haven't been down that road before. And, it's a different experience. You make mistakes, you don't do some of the things that you should do. And since, if you think about most entrepreneurs out there have a lot of their total net worth tied up into their business, way more than
Yeah,
50%.
absolutely. Yeah, I can see that. So let's dive into that maybe a little bit more, not so much on the, 60, 80, 100-hour work days and work weeks that people spend, but when you go back into that experience and how you advise people nowadays, are there particular things both on the personal asset distribution as well as preparation for exit where you would say, I always say, I should maybe not put words in your mouth, I always say you kind of need to start with the end in mind. And even though that end might be like quite a few years into the future, that's what we do with the real estate investments. And I wonder how much of that can be transferred to business ownership with an exit strategy.
Well, I think you've hit the nail right on the head. I've often been asked by entrepreneurs when I speak or when I'm in a roundtable discussion, and someone will raise the question, why in the heck do I want to think about exiting my business and selling it 10 years from now? I'm too busy running my business. I'm putting out fires. I'm meeting payroll. I don't have time to think about selling my business.
Right.
And there's some logic to that. I've been down that road. I understand. I get it. But as you said, you kind of have to know what that end game is if you wait, because what I've seen is that most entrepreneurs are forced into an exit by events or circumstances that they were unplanned for. If you think about most of business exit is that things are going well, they're going to the bank every week with a lot of money, they're doing very well. And why would you want to sell a business when you're kind of coining money?
Right.
And that's probably the time you should get really serious about selling your business because that's what people want to buy. When your business reaches a plateau and flatlines a while and then maybe actually has some decreased revenue and profitability, and then you say, oh, holy smokes, market's becoming competitive, I'm getting burned out, I think I need to sell. And the buyers on the other side of the table see that and they want to know why. They want to know why sales have plateaued or have started to decrease. And you aren't going to be in the best negotiating position at that point in time. You'll have a lot fewer buyers at the table when you're in that circumstance. So, if most of your net worth is tied up in your business, then you want to do everything possible to optimize that value and be able to orchestrate your timing on exit so that there's a lot of opportunity for the buyer because that's what buyers want to buy. They want to buy the future They don't want to buy the past. They will pay you for the past. That's what they'll compute the value of your business on. They don't want to pay you for revenue and profits that you haven't earned yet. And so if you can position your business for an exit where you are creating a lot of opportunity for the buyer, then they're much more willing to give you the price or the multiple that you're asking for, and maybe even get into a bidding situation where they'll pay you a little bit more than you're asking or give you better terms because there's one or two other people at the table wanting to buy your business. And that's kind of the ideal situation you want to be in. And generally, that does not happen if you don't plan it or orchestrate your exit. You don't generally have a lot of people banging on the door wanting to buy your business. And if you do things right, you can create that environment, that dynamic.
Okay, yeah, that's very cool. So to make this a little bit more tangible, so to speak, could you maybe recall an example where you would say, okay, this was the situation, and here are some of the things that either you helped the owner with or work together with them, or they asked you to come in and say, okay, so how do we extract a lot of our net worth before the sale?
Yeah, I have a podcast. When I walked away from sold my business, I started this podcast where I interview people that make deals happen. These are the
Mhm.
mergers and acquisition people, the business brokers, the CPAs, attorneys, people that work with entrepreneurs, helping them facilitate an exit and sell their business. And so these experts come on the podcast and they talk about the stories. And so some of those stories are really fascinating, because if I had heard some of those stories before I got ready and went through the process of selling my own business, I'd have been in a lot better shape. And so to address your
Yeah.
question that you asked, are there situations? Yeah, I can think of a story where I'll give you two examples. One
Okay.
is a story of a guy that he was in the manufacturing field. He was a machinist and he started his business. And like a lot of people, he started in his own garage with one machine. And he built it up to nearly a 50,000 square foot facility, had a lot of folks working for him. And he was the crusty guy that just was no nonsense and very independent thinking, prided himself in solving problems on the fly. That's kind of what got him up in the morning, that he came into the
Right.
office and he had a good team, but his word was the way it was going to be at the end of the day. And he had some inbound inquiries about selling his business, and he decided the time was about right. And a larger player in the industry was interested in acquiring his business. And they went into the typical letter of intent, and it went into negotiation of the deal. And in some of those negotiations, he got pretty intimately involved. And that's not something that I advise people. You have an intermediary, someone that's representing you let them carry
Right.
the ball and you don't get involved in some of those details. And he did. And the deal kind of went sideways because he took some of the negotiations personally. And he was dealing with a larger company. And so the people at the table were, attorneys and, some of their finance people. And he took some of the terms that were being offered, although it was a very, very good offer. He took some of those terms and conditions personally, like they didn't trust him.
Right. Right. Yeah.
And he decided he wasn't going to sell. He walked away from the table and says, no, I'm not going to sell. I'm just going to keep running my business. Less than 2 years later, he just was on the brink of filing bankruptcy because when the company that purchased him didn't acquire him, they acquired another player in the field and poured a lot of resources in to grow that company by cutting prices and offering new products in his field. And it really hit his sales and profitability hard. And he was somewhat leveraged, and it just about took his company down. And when he was forced into selling at that point in time, and he walked away from the table with very little because he had debt against the company. And before he lost everything, he had to kind of walk away. So he let his ego kind of get in the way there because of the type of personality he was. He just wasn't going to let these pencil pushers on the other side of the table tell him what the terms were going to be. And he thought his company just was worth more, and he didn't have to accept those terms. And at the end of the
Yeah, and
day.
that's actually an interesting similarity to what I see in dealing with our clients in the real estate field is that people oftentimes think they get a better deal if they can negotiate with the seller or the owner of the property themselves. But it basically destroys this kind of separation where you can say, "Oh, they must be crazy," but not to their face. So having, I mean, there's a
Right.
reason for agents to be in the game, and I think in most cases, when you look at larger public VC things and stuff like that, they also have representatives. They typically not sit at the table themselves, right? So
Yeah, whether it's real estate or a business or other types of investments, I think it's pretty good practice, best practice to not be the decision maker sitting at the table, especially an entrepreneur. Entrepreneurs generally are these very strong headed, opinionated people as a whole. And it's not a good mix when you are sitting across the table from professional deal makers that do this every day, all day long, and they don't take it personally. They're just looking to represent their client or themselves in the best way possible. And it's business, and you just don't want to let the personal prejudices get involved. And that's what happened in this case. So,
no, that makes sense. I mean, in a way, I can say this for my own business. I'm sure you lived through that when before you exited your last company. Over time, there are all these little emotional pieces that are almost like in a backpack that you keep adding, and they weigh heavily, like almost in a literal sense. And when somebody basically just looks at the numbers and the revenues and the assets that are there and stuff like that, that feels like, okay, those are literally the cold hard numbers, but what about all that effort, right? That has value, that's in that backpack, but not necessarily being seen by the people across the table or by the people who make an offer. One thing you mentioned in our preparation, the personal assets or the personal wealth being kind of stuck in the business. Do you have any suggestion? And I want to phrase this a little bit because many of the mentoring clients or people who seek our organization to help them with real estate investments oftentimes ask, okay, can I do this on my own under my name and with my credit score and those kind of things? Or should it all be in a company like in an LLC or in some sort of corporate structure? And when I saw your point, it was almost to me like, okay, yes, there is a corporate structure, obviously, because the company is a corporate structure of some kind, but then people feeding it with basically their personal wealth to some extent. So, do you have some tips? Is there a point where you say, okay, now it's understandable that you did this in the beginning, but here you have to kind of start thinking about not just in the context of exit, but even in general, how much is your personal commitment to corporate liability, so to speak?
well, I think you raise a really good point here. Entrepreneurs kind of bet the farm, they invest everything into their business, and their business becomes their alter ego. And they take a lot of pride in running their business. But at some point in time, prudent planning will tell you, any financial advisor will tell you, if you have a majority of your net worth tied up in any single asset, and for entrepreneurs that start a business, it's always, generally speaking, their business. 60, 70, 80% of their total net worth rests in that one asset. And if that's the case, it's just a matter of risk. That becomes extremely critical then that you manage that asset appropriately. The best thing to do over time is to invest outside. Now, you work with clients in the real estate. A lot of entrepreneurs will take money out of their company and start investing separately on their personal account in building a portfolio of real estate investments, either for capital appreciation purposes, tax planning, or cash flow. Others will invest in equities and build an equity portfolio, and some will do
Right.
both. But you should build some wealth outside of your business. But regardless of what you do, in most cases, almost exclusively, still the crown jewel of an entrepreneur that's a business owner's asset is going to be his business, even if he's accumulated substantial wealth outside of his business. And therefore, it just takes planning to be able to optimize and monetize that at some point in time.
Yeah, absolutely understood. And thanks for explaining that. Real quick, in your experience, when you go through these interviews or stories, or maybe even advising people that ask for your advice in this context, to what extent have you seen any issue when a company is being sold with corporate debt associated with it, as far as taking that over or cleaning that up or anything like that.
So repeat, just make sure I understand. What was the question again?
Well, one of the things, just to kind of build the bridge to what we're dealing with, and you mentioned it, people buy equities, people buy gold, or people might buy real estate with our help. There's similar to the business itself, and I'm a business owner, you were a business owner, are a business owner. You can hold assets and loans and liabilities within the corporate frame of the business, or you can secure it quote unquote privately, right? Like, so one thing that I always advise for people is that when you have a business, it is not automatically going to have a credit score and access to credit lines and all that kind of stuff. So you need to build that up, just like you probably did for yourself personally when you got out of high school and started to get your first bank account and all those things. Although I have to say, I don't know how that works these days. It's been too long ago, but like, how do I build a personal credit score, a personal credit history, and a personal credit worthiness? There is something starting with the dunce number and all those kind of things in the business world. And there is therefore, at some point, if you take your example of that business owner who built the machine shop and built it up and got a $50,000 facility with probably all kinds of machines in it, value that can be borrowed against and credit can be had against it as a business rather than under the owner's name, even though the owner would 100% or 50 or whatever the split is own the business. But then when it comes to selling or exiting, you would be able to say, okay, the seller would assume whatever kind of loans and debts and stuff like that are on there, rather than having you to become whole as a private individual, as a private person. I think a lot of people conceptually struggle with, okay, so if I put money in the business, right, it's most of the time I would call it private or personal money that flows into the business, and guaranteeing it is on the house that I own or some other assets that I own. So in preparation, and I'm just making it up, you're the expert, I'm just wondering, is there a way that you can kind of clean that all up? And would it be a problem to turn any kind of debt into business owned debt so that that transfers with the business rather than having to be resolved in the exit?
Well, yeah, I think that one of the things, it's really a question of scale. Let's take you're leasing a building and the landlord looks at who you are and the business. And of course, the entrepreneur wants to say, I don't want to sign this lease and guarantee it personally. I want the business to do that.
Yeah,
And
exactly.
and that works if your business has a track record and has the scale that can make the landlord comfortable in not holding you personally liable. Larger companies, they don't have the CEO being personally liable, whether it's a group of
Right.
investors that own the company or it's a publicly traded company. The landlord relies on the company because the company has the assets, resources, earnings history to be able to guarantee that lease with the company without any personal guarantees. And so, from an entrepreneur standpoint, if your company is of a scale and has the earning and track record that you have to be able to convince a lender, a landlord, anyone else that are signing contracts and agreements with that the company has a track record in earnings and has assets, then you don't have to personally guarantee it. And so when it comes time to sell the business, there's a lot of those agreements that are going to transfer. And one of the things that most entrepreneurs don't think adequately through, and here's a tip for those business owners out there. When you execute a lease, whether the company is signing and guaranteeing the lease or you personally are guaranteeing the lease, you want to make sure that the terms of that lease or loan agreement are such that it is transferable. And so when the time comes to sell the business, that lease can be transferred. And there are numerous stories on my podcast where the landlord cratered a deal because the landlord was unwilling to transfer that lease without a guarantee from the prior owner. And the prior owner didn't want to guarantee it because he wasn't going to be involved in the business anymore. And so he didn't want to have his name on that. And that provision in the lease agreement that was non-transferable end up cratering the deal. And in the specific situation that I'm thinking of, cost that entrepreneur dearly. It was just an oversight. It was something he didn't think through because at the time he was signing and executing that agreement, selling the business was the furthest thing from his mind. But because something happened in his personal life, and in this situation, it was a health issue that caused him that I think I need to sell my business now. He came to the table much sooner than he had anticipated. And the lease was a big, big deal in that situation.
Yeah, that's a great tip for anybody listening. So, Marvin, thank you for sharing that. And I think this is also very true for any kind of loans, right? And it's not just because of the transferability of the loan, but it also depends on the circumstance, right? Like, I mean, in the last few years, been living through this extremely low interest environment, but I don't think anybody can guarantee that that's always going to be the case. And if you think 5 years or however many years ahead and the terms would be twice as much, any buyer would be hoping to be able to take over the loan with existing conditions. And if that's not possible, that could also be a reason to make it fall apart. So before we come to the questions, the one or two questions we ask every guest, since you mentioned the podcast twice, you have to shamelessly plug it real quick before we go to the last two questions.
No, I just think that I look at myself. I made the comment earlier. If I had heard some of the stories on my podcast, and the podcast is called Business Exit Stories, and you
Mhm.
can get it wherever you get your podcast at. If I'd have heard some of these stories and the takeaways from the stories before I had got to the point where I was going to sell my business, I would have been smarter. I would have been more dialed into what I needed to be thinking about. It's just a great, great listen to. And I have, for those that are business owners in your audience out there, I've got a little report that you can go to Business Exit Storage /report two, number two, to download that report. That kind of gives you the big picture view of what you need to be thinking about if you're at some point in time going to sell your business. So,
Yeah, absolutely. Thank you. And I think a lot of our audience members are actually owning businesses of different kinds. And they would probably, on first glance, say, well, I'm not really planning to sell yet. But I think what you really helped us understand is you don't want to wait until you know that you need to sell or want to sell. You want to educate yourself now and slowly, when you have time, get better and better. And that's the same thing that I say about real estate investing. It's just such a complex thing where you start and then you're dialing down further and further, narrow it down more and more. If you want to do this all within like a 6 month period before an event that you're planning to do, it's virtually impossible. So the information on how to get the report and what the podcast is, we're going to put this in the show notes. And so with that being said, Marvin, two questions. And the first one that we ask everybody is there somebody out there that you admire, and if you had the chance, you would love to meet? And if so, who is that and why?
well, I think in our world today, I just like creative thinking people, people that color outside of the box.
Okay.
And if I could go to dinner with two people, I guess, and spend an evening with them, kind of picking their brain, it would probably be Elon Musk and Warren Buffett. Kind of two ends of the spectrum here, one being relatively long term investor and a value investor, and the other one just way outside of the lines. I
Yeah,
spent some,
absolutely. I would love to join you at those dinners because I think you probably would want to have two dinners, one with Elon and one with Warren Buffett, probably, because I would assume if you bring them together, you might just be a side guest and they go about it all the time.
well, there's not a lot of things I'm sure they would agree on how they approach and think about business, but it would be an interesting dinner anyway, wouldn't it?
Yeah. No, that would definitely be. Even though I said I have those two questions I asked everybody, but I have to have a little follow up on that suggestion because it's so fascinating. I wonder what your opinion is. Do you think Elon could win Warren over?
Well, I think that Warren Buffett, at the stage of life that he's in, is not a huge risk taker. And I think that if you could talk to his lieutenants that he has in place that are going to succeed him, I think they're already migrating over to Elon's thought process because they are starting to invest in higher tech versus value investing. If you follow that world at all, and
Yeah, yeah,
I kind
absolutely.
of
I meant it also more in the sense of saying, like, yes, you are a value investor, but what's the value if there is no place to live anymore, right? In a sense, because
well, that's
so.
that's that's true. That's absolutely true.
Okay, cool. And then the other question is, if you had a time machine and you could go forward, backward, anywhere you want, where would you go and why?
Well, one of my all-time historical favorites is President Lincoln, and his approach to his administration was to create a team of rivals. And so he recruited people from both sides of the aisles in his cabinet, And I'd love to have been able to sit in one of his cabinet meetings where there was virtual shouting matches going on. I've read a number of his biographies that people have written
Yeah.
about him. And he had this unique ability to marshal his ideas through a very diverse set of advisors and get buy-in from them, which is a skill we don't have around today.
Yeah, that would be definitely a cool place to go and on the time continuum. Follow up on that one would be, you think people are in general still capable and it's just the politicians who for whatever reasons don't do it, or have we changed so much that this is so much harder now?
Well, I think it's harder today because of the media environment that we lived in, and everything is on a news cycle. Everything is short term thinking. Take Abraham Lincoln. He was thinking of the long term when he, accepted the presidency and went to war. He was thinking of what this country would be decades, if not 100 years down the road, and felt that
Right.
that was worth fighting for. We don't have politicians thinking like that today. It's very short term, the next election cycle, just so they can get elected. I think it harms our country, and the lack of ability to compromise and to accept different points of view and collaborate is missing in today's world.
Yeah, absolutely. I strongly agree with that, Marvin, and thank you for sharing your view on that. One thing, and maybe a little bit glimmer of hope, even though it's quite far away from both Northern California and San Diego. Because I'm originally from Germany, I'm always still following because family members and a lot of friends are still in Europe. And so, for those of the listeners that know or have heard in the media that there was recently a new election in Germany, and the Chancellor Angela Merkel, who had been in power for 16 years, retired, actually in her mid 60s, which I think is actually something
And
advisable.
very
But
and very well respected and thought of throughout the
yeah,
world.
yeah, yeah, exactly. But the interesting thing is, 4 years ago, when they had a national election, the results were kind of similar, even though different parties got different amounts of percentages. And they tried to build a coalition and they failed for exactly the reason that you just gave, Marvin, that while they were talking to each other to try to overcome some of the hurdles and things, so much of the information leaked into the media that it was already basically evaluated and talked about and even shouted about, if you want to go back to Lincoln's shouting matches, before they ever really had a chance to do something, and it ultimately all fell apart. Now, you could argue Angela Merkel was happy about it because then she just used the second biggest partner and did the same thing as before. But what I found was interesting and gives me some hope is this election, she was out of the picture, and there were three parties all in the like 20, 25%, 15 to 25% amount of votes. And they made the first promise was, we are not talking to anybody externally until we're done talking with each other. And you can imagine the media in Europe and especially in Germany was like, oh, yeah, right, that's never going to work. But surprisingly, at least so far, and this has been like 5 weeks now, they've been able to keep that going and keep it contained and getting closer and closer to actually signing a contract. So people can actually make promises and keep promises. And I hope that we can all can kind of come back to that in the future, to leave it at
Well,
it.
that's the ideal, and that's what should happen here.
Yeah, exactly. Well, maybe sometimes it would be actually good. I don't know exactly how, but if there were more than two parties that would have to come together, So, all right, Marvin. So it was wonderful to have you
Hey,
on the
this has
show.
been
Thank you
great.
again. Thank you again for sharing the information. Before we close, one last like little nugget of wisdom from Marvin for current business owners, whether they are already thinking about exiting as they should or now got inspired to think about it. What do you want to leave them with?
Well, I'm writing a book called Pack Your Parachute, and it's using the metaphor pilots don't pack their parachute when the engines are on fire. They have their parachute ready to go. And so, my advice to anyone out there that has a business, start packing your parachute so that if something unexpected happens, you can grab it and head for the exit. Don't try to pack it when you're running toward the exit.
Wonderful. Yeah, that's a great last word. I'm glad, even though I flew thousands of hours, I always had somebody packing it for me. But if you don't have that luxury, then definitely pack your parachute early.
Well, whether you pack it or have other people help you pack it, just make sure it's packed.
Absolutely. So thank you again, Marvin, for being on the show today, sharing your wisdom, the information, the name of your show, the book, the report, all of that will be in the show notes. So I thank you for being here, and I'm sure our audience will benefit greatly from this
Hey, it's been a
insight.
lot of fun. Appreciate your time.
Absolutely.